Good evening, ladies and gentlemen, and thank you for coming to our seminar this evening. You know, it's been a year since our last seminar, but what a year it's been. And for those of you who attended our last seminar, I'm sure you'll agree that this year's market update is a heck of a lot better than last, and a lot less worrisome. Now, I wonder how many of you really remember last year's seminar. And if you remember, you might be surprised by some of the predictions I made with regards to the market turnaround. And maybe you're starting to think that I'm psychic, maybe want a little advice on your love life, or maybe provide you with winning numbers to the lottery this weekend. Well, I'm sorry, but I can't help you in that regard, because you see, the predictions I made had nothing to do with psychic ability. They rather came from my knowledge of the markets and the fact that they're cyclical. So my advice to you this year is very similar to my advice to you from last year. And to avoid being repetitive, I'd simply ask you to refresh your memories by going to our website, clicking on the video segment up in the top corner, and looking up the video clip titled Succeeding in the Financial Markets. That will bring you right up to speed. But there are a few points that I'd like to mention about some basic strategies before I move on to my main topic. The first one is risk tolerance. Your risk tolerance and investment strategies should be based on your current life situation and your investment comfort level as well as time horizons. It really shouldn't be determined by current market conditions. But what I find is that sometimes when markets are on the upside, you have conservative investors that think that they're more aggressive and they want to take an aggressive approach to their investing. And likewise, when the markets are on their way down, you have a lot of aggressive investors starting to think that they should take a conservative position. And that's really not the way it should work, because this type of flip-flopping could really hurt your long-term results on your portfolio. So, what I'm saying is that if you're a moderate investor, in good times, you're also a moderate investor when the market's on the down cycle. And likewise, if you're an aggressive investor on an up cycle, it's the same thing when the markets are on a downturn. The only time that your risk tolerance should be considered to be changed should be if there's been a significant change in your life, business, or personal lives. For example, maybe you've gotten a promotion and you're making more money, or maybe you've just had a child, or you're getting closer to a specific goal such as retirement. And if you're not sure what your risk tolerance should be, then you can go onto our website again, fill out the risk tolerance questionnaire, email it to us, and we'll assess it to see if it matches your current portfolio. If it does, great. If it doesn't, then we'll make the necessary adjustments and we'll sit down with you to review that. Now, the other item I wanted to talk to you about was dollar cost averaging. Now, I know I've brought this up with all of you many, many times, and a lot of you have taken advantage of it. But for those of you that haven't or don't understand what dollar cost averaging is, it's basically taking a specific amount of money on regular intervals such as weekly, bi-weekly, or monthly, and investing in your portfolio. The idea behind it is that sometimes you will pay more for a specific fund and sometimes you'll pay less, meaning that the average cost per share is going to be lower. And the lower your average cost per share is, that means more money for you. Now, looking over the past year, what have we learned? Well, I think it's obvious that some people panicked and they left the markets and they lost out in a big way. They were really hurt by their emotional reaction to the market downturn. And now the hard part is trying to get them back in. So they've somehow got to be dollar cost average back into the market, and that can be very difficult. Fortunately, most of our clients, they stuck to their game plan, and even though they might have been nervous through all this, they followed our advice, and I want to thank them for trusting our investment team. We've seen significant improvements already this year up to this point, and I'd like to congratulate all of those who stayed the course and perhaps even took the opportunity to invest additional money into their investments, because they've been well rewarded for their actions. A good example of this is a tax-free savings account that was recently introduced by the government. And basically what a TFSA is an account that the government developed whereby every Canadian can invest up to $5,000, and in this account, any gain on that investment is totally tax-free to them. Now, the banks took the bull by the horns and they started promoting this product to everybody that would listen and suggested that you invest it in GICs. And the GICs are going to pay you a whopping 1 or 2%. On the other hand, we believe that that product was perfectly built for equity investing, and that's what we suggested to our clients. And as a result, our clients who invested in TFSAs in an equity fashion were rewarded with returns of over 40% in the last 6 months alone. By taking advantage of the downturn and investing in equities, our clients have realized gains in the last 6 to 8 months that would have taken 15 to 20 years to achieve in a GIC scenario. The investment returns were so significant that clients were calling to make sure that their statements were actually accurate. And then when they found out that they were, they wanted to deposit more money. But we had to remind them that, remember, $5,000 maximum per year, they would have to wait until January to make additional deposits. Now, by this example I've just given you, you can see that downturns in the markets are not always a bad thing. They create great buying opportunities in many scenarios. Now, there's always going to be ups and downs in the market. But I think that we've learned through this past year that these cycles should never steer us away from our long-term investment goals. And I'm sure that we'll be more emotionally prepared if we ever have to face this type of situation again in the future. Now, moving on, I'd like to talk to you a little bit about a very important part of financial planning that sometimes gets overlooked. When we discuss our investment plans, we often talk about things such as what kind of investment I'm going to make, the deposit amount that I'm going to invest, what's the rate of return I can expect, and tax breaks and that sort of thing. Then you've usually figured out what your long-term goals are, such as children's education or your retirement plans. But sometimes we neglect the important issues, such as what if we die prematurely, have an injury, or ill? Basically, what happens to your family if you die prematurely before you reach your investment goals? It really doesn't matter how good your intentions were and how much you planned on saving. If you die prematurely, you're not going to reach your investment goal, and your family could be really hurt financially. Hence the obvious need for life insurance. What happens if you get injured and can't work anymore? How well are you covered by your group benefits at work? Do you need supplementary disability insurance? Do you have any DI at all at work? What if you're diagnosed with a critical illness? And I think that most people understand the need for life insurance. And more people are realizing the importance of disability insurance. But is that enough to protect your financial future? Well, let's just take a look. You've put away money for your future. You've bought life insurance to protect your family in case of your early demise. You believe that you're adequately covered by your group benefits at work. And you think you've done everything right. And now you or one of your loved ones is diagnosed with cancer. What are you going to do? And that leads us into what I'd like to talk to you about tonight, and that's critical illness insurance. Now, critical illness insurance is a product that was developed to provide coverage to someone who suffers from cancer, heart attack, or stroke. They've also included a rider now that can be added to the policy to cover over 20 other conditions as well. It can also cover loss of independence, which can cover illnesses that are not necessarily covered in the list of specified conditions. Coverages range from $10,000 to $1 million, and this product used to only be available to 18 plus in years. So you had to be 18 years of age or more to buy it. And the way it works was this. 30 days after you're diagnosed with one of the covered conditions, the insurance company is going to pay your claim. You might need this money to cover expenses such as out-of-country medical expenses if you want to go abroad to get special treatments. Maybe pay some of the bills while you're trying to recover. Maybe allow a spouse or parent to stay home to take care of that loved one. Maybe remodeling the home to accommodate a disability that somebody's dealing with. Maybe a bucket list. Maybe something you've always wanted to do, and now while you still can, you want to take advantage of that, and the money can be used for something like that. There's a lot of different things it can be used for. In any event, if you never make a claim with this product, the insurance company, when it matures, when that policy matures, will give you 100% return of your premiums. It will be totally refunded to you. So imagine that. If I claim, I get paid. If I don't claim, I get my money back. You can't beat it. It's a win-win situation. Now, if this product's so great, why are so many people still not insured with critical illness insurance? Well, I think there's a couple of reasons. One of them is, I think that the product's not promoted enough. I think also that people don't understand how critical illness insurance works. You look at older people. I think some of them believe that they have the financial resources to deal with anything that might come about. And it can be very expensive for older people because it's heavily underwritten based on family history and age. And obviously the older we get, the more expensive it becomes. Younger people, the cost is extremely low, but they don't believe anything's going to happen to them. They're 25 years old or whatever. They've got better things to spend their money on, and they believe that OHIP's going to take care of them just like CPP is going to take care of their retirement. And we all know how true that is. Now, I have to admit, I was one of those people who didn't realize the urgent need for younger people to purchase this product. None of the listed diseases were going to affect these young people. They had to take care of other financial priorities and could worry about critical illness insurance when they get a little older. Well, I've since found out through personal experience how important this product is to people of all ages, from infants to seniors. And I wanted to give you some examples. I have this one client, very good client. They had a toddler son, age 3. He was diagnosed with leukemia and another rare form of cancer. Treatments were so intense that the mother had to quit her career to stay home to look after the child. Her home office was converted to a mini hospital, if you can believe it. You have to see it to believe it. Eventually, she had to be relocated to the city where the treatment took place. So they sold their house, they pick up, and they moved to another city closer to the hospital. The husband was traveling back and forth on the weekends, and eventually he couldn't even do that anymore. He wanted to be close to his family and be more involved and be there for them. So he quit his job and got a job closer at a lower rate of pay in order to be close to his family. Now, the financial burden these people had to endure, you can't imagine. It is unimaginable. I have a friend as well, another example, a friend of mine in my age group, had a heart attack, was making good money, had disability coverage at work, and he believed he was adequately covered. The problem is, he had LTD insurance at work, but how much do you have? What are the limits? Are they capped? Well, he took a tough hit, because when he did get disabled, and he went to claim on disability, he found out that he was only going to get 66% of his income. Add to that the maximum payout per month on that plan, regardless of what you earned, was $3,000, and the coverage was only until you were 65. When you consider the fact that he was making $200,000 a year, his income basically dropped from $16,000 a month, roughly, to around $3,000. Can you imagine the impact on that? So we looked at other alternatives. He could draw from his RSPs, but the problem is if you draw from your RSPs, there's an extreme cost to that, because, for example, for every $100,000 you take out of an RSP, half of it's going to go to taxes. So that's not a very good use. Plus, forgetting the tax implications, if you use the RSPs now, they're not going to be there for you when your benefits run out at 65. So how are you going to fund yourself after age 65 if you use up your RSPs now? He could get a loan, but first of all, who's going to lend you money if you're unable to work? And even if they lend you the money, how are you going to pay it back if you don't have any income coming in? Just the cost of borrowing the loan is going to knock you down. How are you going to pay it back? The last example I want to give you is my son, Mike Jr., who's 31 years old. Mike was diagnosed this past April with fibromatosis. And the diagnosis was an emotional roller coaster, I got to tell you, because we went from, at first thinking it was malignant sarcoma and that he had less than a year to live, to possibly losing his leg, to where we are today. And I want to thank all of you, because all the letters and notes and well wishes we received from you really helped us get through this difficult time. And like I say, an emotional roller coaster like you can't believe. Now, Mike was uninsured for critical illness insurance. And there was a reason for that. He had no mortgage. He's single. He's got no kids. Limited financial responsibilities. And he was a smoker. And that's why he didn't have the coverage, if you can believe it. Because when we approached him about setting up some CI insurance, he told us, well, because I'm a smoker, you know what, Dad, I'm quitting. So when I've quit for the allotted period of time that's required so I can be considered a non-smoker, I'll set it up then. And Brian and I talked about it, and we thought, well, what's the big deal? Because he has no responsibilities. So we agreed. And when I look back at it now, what a huge mistake that was, because not only does he not have the money to help him today, but he is uninsurable for the rest of his life, or for the foreseeable future anyway. And that really bothers me. Now, the prognosis and treatment goes like this for Michael. He's got 5 weeks of radiation, and he had to do this daily, 5 days a week in Toronto with Princess Margaret. Then there's 6 weeks recovery from the radiation, and after that they're going to set up the surgery, and there's about 2 to 3 months recovery from the surgery, and maybe an additional 3 months of rehab after that. So at the end of the day, from start to finish, he's going to be approximately gone 1 year where he's had reduced or no income. The hospital experience was incredible eye-opener for me. You know, we went into Princess Margaret, Mike and I expected to see mainly older people there. And what happens when you have radiation treatments, they like to do a radiation class. And so basically what they do is they take all the patients, they put them in this class, and they like to have a loved one there, at least one if they can. And they kind of go over what the treatments are, what the equipment looks like, what you can expect, you know, side effects, and all that sort of thing. And when I went into this classroom and sat down with Michael and surveyed the group, you know, looking around and just surveying the group, I was amazed because there were 14 patients in this room. And my guesstimation was that 5 of them were younger than Mike. It looked like one was over the age of 60, and the rest of them were between the ages of 30 and 45 years of age. I was shocked to see how many young people were affected by these horrible diseases. You know, a patient's focus really should be on getting better. Concerns that they had when they were asking questions were mostly about transportation, how they were going to get there, were there any financial subsidies to help them pay their bills while they're dealing with all these treatments. It was a surprise to me that they seemed to be more worried about their financial situation than they were about the burdens that were and the physical complications they were going to be faced with in the very near future. You know, OHIP is a great program, but it doesn't cover everything. Transportation and parking for Michael during this period of time, we estimate to be about $700. That's what it cost us. And that doesn't even include how many times we went to breakfast, because we had to be there at 8 a.m. So, I mean, we had breakfast pretty much every day as well, so we didn't even count that. This was just strictly parking, gas, you know, that sort of thing. Lost wages. Mike has no dependents, but he still has obligations. He's got car insurance like everybody else. He's got his car payment, his phone bill, and his rent. Now, fortunately, I have the flexibility and the financial resources to be there for my son to help him through this difficult time. And it's been very difficult for us, and it has taken a financial toll on our family. And it's really left me wondering how many people have the flexibility and resources to handle this type of situation if they were ever faced with it. And what you really need to be asking yourselves is that, are you really protecting insurance or emergency funds? You know, do you have proper insurance? Do you have an emergency fund? Could you do it if something happened? Could you or your spouse stay home to recover with the loved one, whether it be a child or a wife or a husband? Are your kids covered? And if they're not, are you in a position to help them? Because what about your grandchildren as well? Are you in a position to help them? You know that if your children or your grandchildren don't have the resources or coverage to take care of themselves, the responsibility is definitely going to fall on your doorstep. Any parents here tonight? Let's have a show of hands. Obviously, a lot of us. Now, okay, put your hands down. I want another show of hands for any parents here who haven't at some point had to offer a little financial assistance to one, two, or all of their children. I believe that everyone in this room, and pretty much everyone out there, can identify with the fact that our kids are always counting on us to be there for them when they need us the most. The price of critical illness insurance for a young person is insignificant, especially when you compare it to the cost of dealing with an illness if they're not covered. Don't make the same mistakes that I made thinking that it wasn't going to happen to us. It can happen to you, and it could easily destroy you and your family financially. And that's why I'm making it my personal goal to make sure that I encourage every one of my clients and friends to include critical illness insurance as part of their financial plan. We've included some very good support material for this product in your folders. I would please ask you to take the time to read it and call us with any questions that you might have. We'll be happy to help. And if you'd like to set up an appointment to discuss it further, please see Peggy after the event, and she'll be happy to book an appointment to discuss it in greater detail. At this point, I'd like to take a lot of pride in what Langlois Financial Services brings to the table. I always do. And for each and every one of our clients, I always like to take a few minutes at every seminar to remind everybody of what services are available to them. At Langlois Financial Services, we meet face-to-face. We guarantee it that at least once a year, we're going to sit down with you at a time and place of your choosing, whether it be at your home or your work or at our office, to sit down and review your portfolio. And if you need to see us more often, not a problem. But we promise we're going to do it at least once a year for you. We make contact with you by telephone. So, in ourselves, at the office, you can call our office from 8:30 to 4:30, Monday to Friday, and until 8:30 p.m. on Mondays. You call, you're going to get a live voice. You're not going to get a recording. You're going to speak to somebody who's going to be able to answer any questions you have or set up an appointment for us to meet with you. We also have our cell phones on our business cards. And that's because we want to be available to you 24 hours a day, 7 days a week. This way, we know that you're going to be looked after at the moment that you need it. I don't care if it's Sunday at 3 o'clock, you can call us and we'll be there for you. We have our website. We're very proud of our website. We have the LFS Report, which is our quarterly newsletter that you can sign up for and get information on various topics from investments to insurance to retirement. It covers a wide range of products and topics. We also have our market updates on our website, where you can get the updates on what's going on out there from the professionals from some of the top firms in the country. You can also access your account through our website. You can actually go in there and take a look at it every day if you choose. You just call Peggy and set up a password, and off you go. We do send occasional emails to everyone. Information we believe is important. And we cover topics such as taking advantage of volatile markets and coping with markets and things like that. But they're very rare. But from time to time we like to do it. We've even used it recently to update people on my son's condition. And we've gotten a lot of response from that. We also have contact information. We do really need your help in this regard. We have everybody's emails and cell numbers and work numbers and home numbers. So we'd like you to make sure that if you change any of that, please let us know so we can continue to provide the contact service and advice that we've been able to do, be able to reach you all the time. That's very important to us. So if you've changed anything, please let us know. And if there's a particular part of contact, like a cell number, you don't have one, or you don't want us to call you on your cell, let us know that as well. We also do client events. Events like this evening's are educational events. They're to help keep you informed and better understand what's going on out there. What people worry about is what they don't know. And the better you understand the situation, the less likely you are to panic. We have RSP weekends. And during RSP season, we have our donut and coffee weekends. And if you book an appointment at our office for one of the specified dates, you'll be treated to a donut and coffee served in your choice of a ceramic mug or a nice travel mug. And it's yours to keep. You're also going to be invited to pick a prize from our little treasure chest. And you might win something special or you might win something small. But you're not going to leave empty-handed, and you're going to have a lot of fun. And that's what it's all about. This year's RSP weekends are January 23rd and 24th and February 13th and 14th of 2010. So if you'd like to be involved in that, book early so you not get disappointed. We have social events, and we have several of them throughout the year. And our next social event will be on February the 20th, 2010, when Langlois Financial Services will be presenting the Stampeders live at the Rose Theatre. And this event does include dinner. So anyone who's referred a client to us in 2009 or during the first month of 2010, they will be invited to this referral appreciation night. It's just our way of saying thank you. Now, as I've always mentioned in the past, there's only two ways that our business can grow. One is, if you need a product or service that we offer, we'd appreciate it if you give us a chance to serve you. Secondly, if you know somebody that could benefit from the services and products that we offer, we'd appreciate it if you tell them who we are. Because this way, not only are you making sure that not only are you making sure that you're helping us, but you're also ensuring that your friends and relatives, important people to you, are getting the same service and advice that you've been accustomed to receiving. And in that, I'd like to thank again everyone for coming out. I'd like to thank Mr. John Smith from Great West Life for speaking here tonight. I'd like to thank my staff, the Mississauga Convention Center for putting this event on for us, and all the fun companies represented here this evening. I hope you've enjoyed yourselves, and thank you very much for coming.